Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.1% today. I think the biggest thing that happened today is we actually got within 1 point of the high for the year today. We hit 45.88 and the high was 45.89 on a close basis. So we didn't close there. We dropped back down to 45.50. So got a little ways to go, but it was sort of like, touching a live wire and it dropped right back down. But I think we're going to continue to challenge that. Should be able to get through that. I don't know if that will happen right away, again, because we're seeing some weakness. The market's a little overstretched. Volume is kind of low as far as that goes, but it's still hanging in there and trying to get up there. So maybe it'll happen sooner than later. But obviously, November has been a really good month altogether. So got one more day left. Some other significant things that happened today that were a little bit surprising to me. The third quarter gross domestic product report came out a while back and said we had a 4.9% growth, which is a really big deal. Long-term average around 3.4%. It's the highest we've seen in quite some time. And so today it was revised, and oftentimes they're revised down, but it was revised up. We actually hit 5.2% growth on the gross domestic product. So it's kind of like our overall revenue as a country would be a simple way to describe it as far as that goes. And the other thing that was revised down in this case, which was good, was the inflation report from September's PCE, Personal Consumption Expenditure Inflation Index, which is the preferred measure that the Federal Reserve looks at. And so that was actually revised down for September. So again, that's a good thing. We're really, really setting up for this soft landing where inflation continues to come down and the economy continues to hang in there. It's pretty incredible. It's a rare event if it does happen. Got a ways to go before we can say that actually has happened. But the other thing, that is going to be going on here is we're actually going to be getting the PCE report for last month for October tomorrow. It always comes at the very end of the month for the previous month. It's quite late. CPI, which is the report for inflation most people are familiar with, comes more in the middle of the month, early middle month. And the Fed does spend some time looking at that, but the PCE index is what they talk about all the time. And when they're talking about getting to 2%, they're talking about getting to 2% on the core PCE. So taking out, food and energy and looking at that basket of goods. So having that go down is, again, a good thing. The market is factoring in right now no rate increases in the December meeting. And that's almost at 100% factor at the moment. Quite a few comments from Fed governors here over the last few weeks seem to line up with that they're probably going to not, do a rate increase here. The market's expecting no rate increases for the first part of next year, and then actually rate decreases that would start in May. So we'll see how that plays out. But very good time for the stock market. Is why we're having such a huge run. Again, I do think we will close at a new high for the year. Most likely won't close at a new all-time high this year, just because there's not enough time left, in my opinion. But we could hit a new all-time high in the first part of next year if things continue to develop the way they are. Earnings are doing well, inflation is starting to drop. The yield curve is starting to get more normal slowly but surely. The bond market's having a really good run here, especially the long-term bonds. So um, again, all of this is in response to lowering inflation, the Federal Reserve possibly being done with raising rates. And again, we have a ways to go to say that that's actually going to happen, but that's the expectation at the moment. And that's why the market is moving the way that it is. So anyway, that's what's happening today. Look forward to being able to see, what happens tomorrow. And I'll talk to you then. Thank you.